The 2025 M&A Outlook presented by Goldman Sachs offers an in-depth exploration of the anticipated trends and dynamics that will shape the mergers and acquisitions (M&A) landscape in the coming year. Against a backdrop of improving macroeconomic conditions and rapid technological advancements, the report highlights the factors expected to drive significant growth in M&A activity. This comprehensive analysis serves as a roadmap for corporate leaders and investors who aim to strategically position themselves in an evolving market. Key drivers of M&A activity. The path to robust M&A growth in 2025 is underpinned by three primary drivers: macroeconomic clarity, evolving corporate behavior, and changes in the regulatory environment. 1. Macroeconomic clarity. One of the most critical factors bolstering M&A activity is the normalization of monetary policies. Following a prolonged period of uncertainty characterized by erratic policy shifts and economic instability, the stabilization of monetary frameworks is fostering a more predictable environment for corporate decision-making. This newfound clarity is empowering CEOs to pursue strategic growth opportunities without hesitation. The report underscores rising CEO confidence, with nearly 60% of private corporate leaders identifying strategic growth as a key motivator for M&A. This optimism reflects a broader sentiment of trust in the economic outlook and the potential for value creation through acquisitions. 2. Evolving corporate behavior. Corporate behavior is shifting dramatically, with companies transitioning from net sellers to net buyers in the M&A market. In 2024, corporate buyers accounted for 71% of all deal activity, signaling a marked change from previous years. This trend is fueled by strong corporate balance sheets, as many companies now hold substantial cash reserves. These reserves are enabling firms to pursue acquisitions that enhance their competitive position, simplify operations, and divest non-core assets. This strategic pivot reflects a broader commitment to growth and operational efficiency, key themes that are expected to persist in 2025. 3. Regulatory environment. Shifts in the regulatory landscape are also shaping M&A activity. Larger transactions, particularly those exceeding $10 billion, are facing heightened scrutiny and longer closing times. While this has introduced challenges, it has also compelled companies to adopt a more strategic and cautious approach to deal-making. On a more optimistic note, the anticipation of a favorable regulatory environment under the new U.S. administration has created a sense of optimism among corporate leaders. A potential easing of regulatory burdens is expected to facilitate a rebound in M&A activity, providing a much-needed boost to the market. Emerging trends in M&A. Several notable trends are expected to dominate the M&A landscape in 2025, including corporate simplification, the growing influence of activist investors, and a resurgence in sponsor activity. 1. Simplification and separations. Companies are increasingly focusing on simplification strategies to enhance operational efficiency. This involves divesting non-core businesses and honing in on core competencies as a means of driving value creation. The report highlights that large-cap companies are particularly active in this space, with approximately 40% of announced spin-offs in 2024 originating from firms with market capitalizations exceeding $25 billion. These transactions are seen as opportunities to unlock shareholder value and streamline operations, a trend that is expected to gain further momentum in 2025. 2. Activism in M&A. The growing influence of activist investors is another significant development in the M&A space. Activist funds are increasingly targeting larger corporations, with nearly one-third of campaigns in 2024 focusing on companies valued at over $10 billion. These investors are capitalizing on the trend of corporate simplification, urging companies to enhance shareholder value through strategic transactions such as spin-offs and divestitures. This dynamic underscores the increasing pressure on companies to adopt proactive and innovative M&A strategies to remain competitive. 3. Sponsor activity. Global sponsor activity is experiencing a resurgence, with expectations that over 1,200 portfolio companies valued at $1 billion or more will exit through sales or IPOs in the coming years. Sponsors are employing creative deal structures, such as co-control agreements and minority stake sales, to navigate challenges posed by elevated interest rates and regulatory scrutiny. These innovative approaches reflect a broader commitment to fund performance and liquidity, positioning sponsors as key players in the evolving M&A landscape. Sector-specific insights. The 2025 M&A Outlook also provides valuable insights into sector-specific trends, with a particular focus on the transformative potential of artificial intelligence, AI, and the resurgence of cross-border transactions. 1. AI-driven M&A. Artificial intelligence is poised to be a significant driver of M&A activity in 2025. As companies invest heavily in AI infrastructure, the technology and software sectors are expected to witness substantial deal-making. The report frames AI growth through the lens of the Infrastructure Platform Application Framework, with most activity concentrated in the infrastructure and platform layers. This trend highlights a strategic pivot toward technology-driven growth, as companies seek to build capabilities that align with AI advancements. 2. Cross-border transactions. After a period of subdued activity, cross-border M&A is making a strong comeback, particularly between the US and Europe. This resurgence is fueled by favorable corporate governance reforms and supportive regulatory environments across various regions. Additionally, emerging markets such as India and Japan are identified as hotspots for cross-border transactions. In India, pro-M&A government policies are attracting significant foreign investment, while governance reforms in Japan have spurred an increase in M&A volumes. These regional dynamics underscore the global nature of M&A opportunities in 2025. The 2025 outlook. The outlook for global M&A in 2025 is overwhelmingly positive. Improved macroeconomic conditions, a more stable regulatory environment, and a growing appetite for risk are expected to drive increased activity. Sectors such as technology and healthcare are particularly well positioned for growth, offering lucrative opportunities for companies and investors alike. The report emphasizes the importance of strategic focus, urging companies to capitalize on emerging trends and technological advancements to enhance their competitive positioning. Conclusion. The 2025 M&A Outlook paints a dynamic and promising picture of the mergers and acquisitions landscape. As companies navigate a rapidly evolving market, the focus on strategic growth, simplification, and innovation will be critical to success. The transformative potential of AI, the resurgence of cross-border transactions, and the growing influence of activist investors are just a few of the factors that will shape the M&A landscape in the coming year. By understanding these key drivers and trends, corporate leaders and investors can make informed decisions to seize opportunities and unlock value in 2025. This comprehensive analysis serves as a guide for navigating the complexities of the modern M&A market, ensuring that stakeholders are well equipped to thrive in an increasingly competitive environment.